Discover the future of Philippine agriculture.
Hey everyone, and welcome to This Explainer. Today we're looking at a massive, and I mean massive, transformational shift happening right now in Philippine agriculture. We're talking about a transition from traditional subsistence-level farming to what's rapidly becoming a multi-billion-dollar export powerhouse. It's a fascinating evolution, and we're going to break down exactly how and why this is happening. And you know, this matters to all of us, whether you're tracking global supply chain shifts or just noticing changing food prices at the grocery store. The agricultural landscape is fundamentally changing. Here's how we're breaking it down today. First, the billion-dollar agri-gap. 2, the high-value crop boom. 3, theory versus farmer reality. 4, scaling up, big agribusiness. And finally, conquering the global market. Okay, let's just dive right in.
Section 1. The billion-dollar agri-gap.
So to truly appreciate the opportunity here, we first have to establish the high economic stakes currently facing the Philippine agricultural sector, especially when you measure it up against its neighbors. The current situation? Well, it's pretty stark. There is a massive gap. Look at Vietnam. They export roughly $60 billion in high-value agricultural products annually. The Philippines? Currently sitting at about $8 billion. Economist Bernardo Villegas pointed out that this $52 billion difference highlights exactly why this topic is so absolutely crucial right now. The Philippines has the land, it has the climate, and the capability. But to close that gap and match neighbors like Vietnam, there has to be a fundamental shift in what's being planted and exactly how it's being produced. The immediate solution to this gap lies in high-value crops, or HVCs. Basically, these are crops that don't take up massive amounts of space, but they sell for a significantly higher price than your ordinary rice or corn. Think bananas, pineapples, cacao, and coffee. For farmers, HVCs offer a much faster return on investment and incredible climate toughness. And that climate aspect? That's huge. Unpredictable weather and extreme storms can absolutely devastate standard fragile crops in literally a matter of days. High-value crops tend to be way more resilient, making them not just a smart financial choice, but honestly an urgent necessity for surviving changing climate patterns. They're the secret to earning a lot more without necessarily needing to buy hundreds of hectares of new land. Section 2. The high-value crop boom. Zooming in from those macro billions for a second, let's look at the reality for an individual farmer on the ground and how specific crops are actually transforming incomes. Get this, 2.5 million pesos. According to data from the Mariano Marcos State University in Ilocos Norte, a single hectare of dragon fruit can yield an accrued yet income of 2.5 million pesos in just 4 years. By year 3 alone, a plantation owner can harvest 15 tons of fruit. I mean, this perfectly demonstrates the incredible microeconomic power of planting the right crop. You don't need a giant sprawling farm to start seeing massive returns if you pick a high-value commodity. So, what are the top performers right now? We can call them the HVC All-Stars. First, you have hybrid chili peppers, which are essential for local spicy dipping sauces. Prices for these can jump from 100 to over 500 pesos a kilo during the rainy season when supply tightens up. Then there's cacao, driven heavily by artisan chocolate brands that are just demanding premium single-origin beans. We've also got coffee, specifically Robusta and Arabica, fueling that massive local cafe culture popping up in virtually every town across the country. And of course, dragon fruit, which isn't just heat-resistant, but heavily sought after for health benefits like improving gut digestion.
Section 3. Theory versus farmer reality.
But hey, successfully planting these crops isn't as simple as just dropping seeds in the dirt and hoping for the best. There's a pretty stark contrast between theoretical academic research and what actually happens out in the mud. A comparative assessment of onion production in Nueva Ecija shows exactly what this disconnect looks like. Researchers recommend irrigating the crop 5 to 8 times during the dry season, but the successful farmers out there, they know it actually takes 13 to 16 times to yield a proper harvest. It's wild! Similarly, while researchers advocate for exact fertilizer strategies based on lab soil analysis, farmers often rely on blanket applications of about 10 bags just to ensure their crop survives. It just goes to show that while science is vital, local field experience and generational knowledge are absolutely necessary to guarantee a profitable yield.
To really ground that data in reality, we can look at farms in Santo Domingo, Nueva Ecija, where high-value onion plants are growing right alongside traditional rice. Because onions are such a high-return cash crop, farmers have learned to experiment and plant them off-season, utilizing rice straw as mulch to retain moisture. Talk about ingenuity, right? Integrating a high-value crop into an existing rice farming system when water is exceptionally scarce, that is exactly how individual farmers maximize their income and navigate really tough environmental conditions.
Section 4. Scaling up big agribusiness.
Now, while individual farmer ingenuity is great, reaching Vietnam's $60 billion level requires massive capital. We're shifting the narrative arc here from the individual backyard plot to the macro level of massive corporate and government investments. And when we talk about that kind of scale, we have to talk about Mindanao. Mindanao is the ultimate agricultural powerhouse of the Philippines. It produces roughly 80% of the country's bananas and coffee and over 60% of its coconuts. It commands 41% of the total agricultural area in the country. If the Philippines is going to scale up its high-value crop production to compete on the world stage, Mindanao is absolutely the engine that will drive it.
Recognizing this immense potential, major tycoons are now entering agribusiness, bringing the deep capital needed to achieve those crucial economies of scale. You've got Manuel V. Pangilinan heavily expanding into cattle and dairy. You have former Agriculture Secretary Luis Lorenzo Jr. spearheading a massive project utilizing tens of thousands of hectares for high-tech engineered bamboo for sustainable construction material. And we aren't just talking about buying a few extra tractors anymore. These large-scale corporate investments integrate artificial intelligence and drone technology right into the farming process. This kind of precision agriculture can reliably unlock 10 to 20% growth in specific operations.
And the government is stepping up right alongside the private sector. The Department of Agriculture is currently looking to secure up to $1 billion, that's a billion with a B, in funding from the Asian Development Bank and the Export-Import Bank of Korea. This massive sum is targeted directly at bamboo and livestock infrastructure modernization. That is the sheer scale of ambition and capital required to fundamentally transform the industry and build the logistical networks necessary to support a $60 billion dream.
Section 5. Conquering the global market.
So, with the right crops, field-tested practices, and massive capital falling into place, the Philippines is poised to take over the global export stage. Let's start with a major win. The OECD and the UN's Food and Agriculture Organization project that the Philippines will confidently maintain its position as the world's #2 pineapple exporter over the next decade. Number 2. This is driven by massive demand from China for premium varieties like the MD2 grown in Mindanao. Furthermore, there's an aggressive push to unlock the U.S. market, expanding exports to the U.S. from a mere 600 metric tons to over 19,000 metric tons annually. The Philippines is really cementing its status as a true global giant in this space.
And this momentum is building across other sectors too. Take the cacao industry, for example. They've laid out an incredibly ambitious roadmap. Currently sitting at about 15,000 metric tons of production, they're aiming to rehabilitate 30,000 hectares and plant 7,000 new hectares by 2025. The ultimate goal? To more than triple production and hit 50,000 metric tons of quality fermented beans by 2026. Led by the Davao region, which is the nation's cacao capital, this structured scaling is exactly how you capture the long-term attention of foreign investors who are looking to secure their global supply chains.
And it's not just traditional staples either. Brand new markets are opening up rapidly. Just recently, the Philippines successfully broke into Japan's lucrative $160 million Hass avocado market. As global avocado supplies in places like Mexico and Chile face severe tightening due to drastic climate and drought issues, Mindanao's cool, high-elevation regions have proven they can reliably produce export-quality Hass avocados. The target is to send 484,000 kilos to Japan this year alone. It's a perfect example of capitalizing on global market shifts and filling a really vital void in the international supply chain.
Which brings us to our conclusion. From local farmers multiplying their incomes with dragon fruit to billion-dollar investments in bamboo and avocados conquering the Japanese market, the trajectory is crystal clear. The gold of the future truly isn't in a mine. It's right there in the soil, just waiting to be cultivated. The structural pieces are falling into place across the entire country. So the question you should take away from this explainer is this: are we ready to fully claim this agricultural gold rush, or will we let the season pass us by? Thank you so much for joining this explainer, and I really hope this provided a clear, direct understanding of the massive shift happening in Philippine agribusiness today. Catch you next time.